Good evening, all. Ira Epstein with your financial market wrap-up. This wrap-up is for the evening of Wednesday, the 12th of October. We're getting on to 6:30 p.m. Central Time. Well, if you look behind me, a lot of green in the charts. It means nothing. Why? Because tomorrow morning at 7:30, we get the other shoe. The first shoe today, it was a two-step dance, and the PPI had absolutely no impact. It was a dud of a report. It came in hotter than expected. It had no bearing at all on the market. So the market's not worried about the producer prices. They know they're high, and I guess they're comfortable with it. Not high enough to scare people, today at least. Tomorrow we get the other shoe, and that's going to be the CPI. Now they're looking for a decline towards 8.1% in the headline number and around 6.5% on the core number. Okay, now when it comes out, what happens? Well, I'll give you my scenarios to what I think. I think today's PPI, as much as it didn't have an impact on trading, I think it has an impact on the Fed, and I think it locked in a 75 basis point hike. It will take a shocker in the CPI to change that, but I don't think it can change to the downside. I think it can only change to the upside. I think that you still have the remote, I want to use that word carefully, remote possibility of a 100 basis point hike if this number were to be a surprise and come in very hot. The Fed might just say, after reading the notes tonight, and we have their notes and everything, these people are hawkish as can be. The doves are hawkish. And they're fed up. They're not happy that their rate hikes are not having the impact they want, which tells me at the next meeting, maybe they're going to be whispering. Maybe we go bigger and get it done now so we don't have to be Scrooges at Santa's time in December. We can maybe only give a 50 then, who knows? Or we certainly have taken 100 off the table for them. Think about it. There's a logic to that to a degree. As much as we admire these bankers and that they're people, and they don't want to screw the holiday season up either. Now, things can change to the downside, I think, in one way only. The Fed would have to be very accommodative if, God forbid, there were a nuclear strike by Mr. Putin. Barring that, I'm pretty well set into what I think is going to happen. Now, let me share this with you. Would I trade off my ideas? There is zero chance. I'm a chartist at the end of the day. I love to have ideas. I think I've got a pretty good feel as to what goes on. But when it's all said and done, I'm going to live and die by the chart. As for a CPI report, as I teach you on and this is a major report, on every major report, I get off the train track. I am not quick enough with this gray hair to jump fast enough as that silver bullet train at these crazy speeds is running at me and assume that I'm not going to hit the track, stumble or whatever, and I won't get hit by the train. Obviously, it's an analogy. The simple fact is you can't move quick enough. Why put yourself where you have to move? As I said, if somebody were to give me the numbers for tomorrow, if you gave me today's PPI numbers, the market didn't move on it. It was double the estimate. Had you had it, you'd have said, well, that's going to move the market. It's pretty bearish. Didn't work that way. I'm going to repeat. Mass psychology is hard to figure out when you get these numbers. Let's wait, see how it goes, and attack the market maybe an hour or so after the number comes out. Always let the dust settle. Walk away, get a cup of coffee or tea, get away from the TV screen, come back, see the number before you leave, see the reaction, and leave. Then come back and have a calm head about you. Got it? Because the reaction will be over at that point. Okay, let's go to the markets and see what we got. There's nothing bullish here. We've just come from 42.81, by the way, to 35.96. I'm not counting this high. I'm taking the biggest reactionary high that took out a prior one. Just we have a feel for what's going on. What's the chart pattern? Believe it or not, you have an uptrend pattern. You have higher lows and a higher high. I know you weren't ready for me to say that. But you're under the 18-day average, so rallies would be contra-trend rallies. Why? The biggest trend is decided by, in my opinion at least, where prices are trading in relation to the 18-day average of closes. When it's under it, the bias is down. So any rallies, a contra-trend rally. If the market gets a sell signal out of this, then it's in line with the bias and the trend is down and the bias is down. It's very simple to understand. You get in trouble very quickly if the market gets under 35.79, the low of 2 days ago now, because that would give you then lower highs, lower lows, and you start opening the door to come down, and you open the door then to the lower Bollinger Band at 35.32. Why the band? Because 95% of the time the market will trade within the black lines, the black dashed lines. And if that's the case the first time you hit it, why would I think it's just going to collapse from there? It typically doesn't. You can fight it. You can fight it on the top band. Do it all you want. 95% of the time it'll close within the bands. That does not mean it hits the band and turns up and the market goes away. It's not what I said. You get down to it, that's where the pros take money off the table. And because the trend would be down, they're looking to sell rallies, but not at the band. When you look at momentum, you're oversold. Now, oversold can correct by rallying or embedding. Embedding means both numbers decide to go sideways under 20 and lock in there for several days or more. Take my enhanced Bollinger Band course on our website at iraepstein.com under education. It will teach you what that does. And once it embeds, it teaches you how to be having orders in ahead of time to catch rallies, and you're selling into the market until the band is lost. Got it? There's a whole way to do this. 13 chapters, all video, laid out for you. See what I do, you do the same. And by the way, with the course, we give you 2 weeks free to my morning spider and ETF videos. It pays for itself, the course, and charting software with all the data you need, and my slow stochastic studies. Mine will look a little different than yours. Every one of my paid subscribers is entitled to write me. I give them how to change their settings to make it match. And no, it is not inside the 20, the 15, or the 20, the 80, and you change days. It's behind the scenes. Okay. In the micro mini NASDAQ, there is no trend. You have a lower and low and a higher high at work. You can get one by taking out today, Tuesday's lows. This is Wednesday trade, this is Thursday trade already. But Wednesday trade, that's what I meant to say. If you take out Wednesday's lows, we can get back into a bear trend. You have the same trouble in the Dow. You have higher lows, higher high. The bias is down since you're under the 18-week average. Momentum's flat. Again, a perfect place to be is with your hands in your pocket, sitting there going, let's see it happen. What do we do from there? In the Russell, you have no trend. You have a higher high, lower low. You're fighting your battle at the 18-day average. And in the VIX, you got up to the upper band. And again, I'm going to repeat it. When market gets up there, the pros are coming out. 95% of the time, it's not going to settle outside of that band. In the T-bond market, well, obviously the bonds, notes, everything's going to be glued to this in the financial arena. The commodity arena, be it the grains, the softs, they're all going to be looking at the dollar. And if the dollar moves big down or up, it's going to impact what they do. It's a big day tomorrow. Lower highs, an attempt at higher lows, and oversold. Bye-bye. I don't want no part of that. 10-year notes, oversold, downtrend. Somebody else can own that as far as I'm concerned. Dollar, well, it's just coming up now to the point where I can get rid of this and say I've got higher lows, and that's what it should be, and now higher highs. Today's high scooted out and over 113.28. I missed putting that on there. In the eurocurrency, you're trying to get a scoot here, but all you've got are higher high, lower low. No trade setup. How many things am I telling you not to do tonight? It's one after the other. British pound, I told traders they can sell short against that 18-day average. They've got their own set of problems there. Where would I be wrong? It's very evident. If I'm wrong, by the way. Get over 111.94. I don't want to be short anymore. I don't care what it does at that point. Not interested. Get back under 109.37. That's where I think it gets really interesting to the downside. I think the stops will be there waiting to sell it. trying to push it back to 106.87. So you're at a funny spot in here right now. You want to trade very, very light if you're going to trade this, okay? It's basically you're counting on what's going to happen in the market. As the Bank of England said Friday, they're not going to supply the gilt market. But I think they will. Their job, their mandate is a stable market. They don't have a choice. In Bitcoin, why get involved now? So now the market's in a bit of a problem. It was a great short. Time to have taken money if you're a subscriber. And now it's time to lock in anything that you've got on the books. The differential between Brent and WTI, well, you saw today that the Saudis are trying to make their case. They released, of course, data that they produce along with OPEC, but they're OPEC. You know that, and I know that, as to how much oil demand's going to fall off the rest of this year and next year. And at the same time, there is big movement in Congress. Let's go get them. A minimum. Why are we selling all these arms to them that they need? Maybe we don't say we won't sell it. Maybe it has to be tabled a while we look at what they did and we study that. What about price fixing? I mean, it's a cartel. They're price fixing. You tell me they're not fixing it. Tell me. Can we get together right now? T-Mobile, Verizon, and what other else? And they go in there and they decide, hey, you're going to pay 0.1 cent for a minute of time, just making up a number, right? Isn't that price setting, collusion? Well, what about the cartels? Now, they have a lot of assets here in America. We can't go there and grab their assets, but they have investments here, big ones. They opened the door. I'm not saying do it. They opened the door. These are the threats coming at them. I am not saying to do it, and then the other part of me is saying to do it. I mean, I'm torn. I admit that. In the WTI crude, you got up to all the resistance points and you backed off. But remember, there's an effective floor under this market. What is Ira talking about? What is he possibly saying? The beans, the can of beans is spilled. The Biden administration told the Saudis they would, at $75 Brent, start replenishing the strategic reserves. Well, we don't need the Saudis to know one thing. We got to replenish our strategic reserves. We now know the number that is comfortable to the administration. That's the game. You have a floor. We don't need the Saudis. You have your floor. I'm shocked that I'm not hearing this from other energy people. You have to replace the reserves. That's what they're there for. They're reserves. You can't keep this going. And the number that's palatable seems to be 75. So until I hear different, or somebody can prove what I just said wrong with knowledge, the administration was willing to do that. Why would that change? That seems to be what the economists within the White House have come up with as their number to do it. Interesting. Different way to look at it. November heating oil, higher lows, higher highs. This is the market along with nat gas for the wintertime. You know I like these. Now, it embedded today. It tells me that on pullbacks, the pros will nibble into the long side. They'll get out if the red line closes under 79. It's at 85. And they'll be looking to get back up to the Bollinger Band. It's what I'm expecting. There's a way to do it. It's in my enhanced Bollinger Band course. Now, how long is this battle going to go on? I did read a report today where because of the additional production that's going to come on in America, which is happening now out of Pennsylvania and Texas, that this market could be going down to the 550 level. I understood what was written there, and I was fairly impressed with it. It said it in a way that I grasped. And that includes extra exports. We are setting records for natural gas production in America. This is all good. this could be why this market may not be the one to latch onto for the winter right now. It might have to come out of the other side, the heating oil market, to play that game with jet fuel, distillates, and so on. So you put it all together, you try to come up with game plans, and that's what we're here for. And we do this continually with our research too. Now, I know a lot of you like to get research. I mean, a lot of it. You like to know, hey, let's assume you're on the stock indices. We write about them, and you'll say, I don't want the grain information. I don't want anything on the soft commodities. I want to know one thing. What are the stock indices? Who's doing what? Our reports do that. What about currencies? I don't need the other stuff. I just want that. Our reports do it. What about pivot point numbers? Our reports do it. What about ideas on trading and options? Our reports do it. Special reports. It's all here for you. So we have a wealth of information. No, we're not going to give it to you if you don't have either a research contract with me, in other words, a subscription, and or a trading account. But with them, they're absolutely there the whole time. So if you'd like to see what we do, the first thing, all you need to do is go to our website under free offers. You'll see it on the top left, or just follow my magic finger here right to the top. And when you do this with your cursor, you'll see a box appear, give it a click, and you can sign up right there. Take a look. You're going to see what commodity people write about the market, and all of us here, we're gray-haired. We have been around this. I'm Ira Epstein. You have a good day.